Take a look, 230, 237, 245, 266, and then just recently they took a little bit off. Now, why would they do that? Well, we have to determine why so that we can know what's likely about to happen. So let's start by examining and putting things into context, okay? How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was reported on April 11, 2023. Here's a brief snapshot of the positions held by the institutions as of that date. Well, welcome back, welcome back. It's a gorgeous day here in Muskoka, Ontario, and we got some fresh data to examine. And I thought this would be a great time to take a look at it. So let's start by having a look at gold. What do we see with gold? We see the banks increasing their positions. They had 260, well, recently 260, but take a look, 230, 237, 245, 266, and then just recently they took a little bit off. Now, why would they do that? Well, we have to determine why, so that we can know what's likely about to happen. So let's start by examining and putting things into context, okay? Let's start by examining the weekly chart. Now, what we've been talking about for quite some time is that the banks are in a buying cycle, okay? This is why we have this circled in green. The banks have been in a bullish cycle where they are accumulating long positions, and we could see that by looking at the increase in longs. But just recently, we saw them taking some off their portfolio. Now, why are they taking some of the long positions off their portfolio? Well, to understand this, we have to look at the other markets in combination with this. So just keep in mind what is happening with gold. They're mostly focused on long positions, but they just took some off their portfolio. Later on, I'm going to mention this again and tie it back in. So let's take a look at oil. What's happening with oil? Price contacted an institutional buying zone, and look what's been happening ever since. It's been uphill, okay? Now we're pretty up on the charts. If we take a look at the weekly chart, you can see what's happened. Here was the weekly area of demand that came into contact right here, and it's been upside ever since. So they are clearly interested in accumulating a long position, okay? If we look at the data, you can see that represented here by looking at the positions, 303, 289, 307, and now 309,000. So clearly they are accumulating long positions, okay? And if you look at the short positions, do you think they are focused on short positions right now? Look at shorts, okay? They are very cooled off. So I would say they are not focused on short positions. So they are focused on longs. They haven't become super aggressive just yet, but that is their main focus. Now we look at the US dollar. Let's first take a look at the data. What do we see? A slight increase in longs. 24,000, 25, now 26,000. Nothing too shabby. They're below average for long positions, and they're below average for short positions as well. If we take a look at the charts, specifically the weekly chart, we can see that this weekly supply here just fell short of coming into contact, but I do believe that this is in play. How would we know that? Well, look, it's taken 1, 2, 3, 4, 5, 6 weeks, and there's been nothing but a push to the downside, okay? The only thing I'm looking at here is when we look at the CFTC data, shorts went from 15,000 down to 12,000. So clearly, the non-commercials are not adding to short positions at this point. Price did react from the supply zone, but it's not the non-commercials that are causing this move to the downside. I think a lot of economic factors are playing a role in this, and you just have to look through the headlines to see why the US dollar would be dropping. A lot of talk about it not becoming the world currency anymore, and so forth. I'll leave that up to you to see for yourself. Now the Aussie. It's been in a bearish cycle for the longest time, and the last set of data shows us that they increased them by 10,000. They increased their shorts by 10,000 from 73 to 83,000 right over here. Now, if you look at what the banks, what the retail traders are doing, they're mostly long right now. So the banks are shorting and the retail traders are mostly long. All right. So where are we going to go? Well, all I know is we have an institutional demand zone right here. It has yet to be contacted, but it is right there. If price drops a little bit further, it'll contact it, and we're likely going to see more upside. USCAD, look at that. They are focused on long positions. You see that? But they are focused on profiting from those long positions, okay? So they're closing off their long positions, reducing them from 91,000 all the way down to 73,000. Now, if they're closing long positions for profits, who do you think is buying them? That's right, retail traders. They're mostly long right now. Okay, they're mostly long because the banks offloaded these long positions to them. All right, so let's zoom out again and see what's going on. We had a trade signal to the downside, and it was a profitable trade. Target was hit, and still we suspect that more downside is coming. Okay, we got institutional supply that is in play right here, so the pressure over the long term will be to the downside. But first, the banks have to take full profits on those long positions, and then when they start to accumulate a short, that is when we'll see the real pressure to the downside come into play. US dollar Swiss. Look at that. Longs are cooled off, shorts are cooled off, price is dropping down. An institutional buying zone has just been removed. Now you ask yourself, why would they be removing institutional buy zone? Well, it's likely because they have plans to send this further down. Okay? So as price is dropping, what do you think retail traders are doing? They're going long. Of course they're going long, right? So they're on the opposite side of what they really should be doing. They should have been shorting at this point. So with demand now removed, we're likely going to get some kind of a push to the upside short term before a continuation down to the downside on the chart. Euro, here's an interesting one. Remember what I was talking about with respect to gold. Now, if you look at a correlation between gold and euro, and I posted a correlation between gold and euro up on our Telegram channel. If you're not on there, you got to get on there because you're missing out. So if you take a look at the correlation, you can see that there is a positive correlation between the euro and gold. So that is to say, the direction that euro and gold are going to go are likely going to be in the same direction. Now, what did we spot with gold? That they're taking profits on long positions? Let's take a look at long positions from the euro. What do you see? Super aggressive. That's the first thing you see, right? What else do you see? 244,000. Is that close to 266,000, which is their all-time maximum largest long size position? Yes, it is. What does that tell me? That tells me that they have to start closing off these long positions at some point. And when they do so, it's going to cause a move to the downside. Now, we've already seen how retail traders were taking those long positions off the bankers just this past week. They were closing them off. Bankers took them. And now we see that retail traders got out of those long positions last minute at a loss. And they're starting to pile into a short position again. Okay. So they're mostly short. But here's the thing. We've got institutional supply that is in play here. Okay. And with the banks being so overly long, okay, and they're reaching near max size, that's a pretty good indication that we might see a drop begin to form here. So if you're long the euro, just be aware of that. A potential drop could be coming. It's likely the reason why they're taking profits on their long positions on gold. Okay, let's move over to the pound. Pounds, what do we see here? Well, we can see that institutions are mostly long. They've been increasing over the last few weeks, 28, 46, and 54,000. It's quite aggressive. 54 is well above their average size. Shorts are below. If you look at the coloration of the cells here, you don't see any specific sentiment right here, okay? It's somewhat neutral. I would not be trading the pound right now because of that. Another thing I will mention is take a look at this. This is the monthly chart. Okay, and just like the euro, we have an institutional selling zone here. Okay, it's a lower quality zone, but it's still supply. And look how price reacted from it. Look at that. Look at that. And now we're basing. Okay? So beware. If we get a move down in gold and euro from the profit taking on long positions, it could push price lower on this chart as well. If we look at retail sentiment, we can see that they are about 50-50, a little bit more short than they are long at this time. US dollar, Japanese yen, take a look. They were aggressive with their longs, okay? They've recently been profit taking on those long positions. Shorts are cooled off. So you see how they're not piling into a short position, all right? That's very important to understand. They're not piling into a short position. They're profit taking. Now, take a look. They were massively long here. We called this drop, okay, from the September highs because they needed to profit take from those long positions. They were cooled off, they increased them again, and now they're closing them again. So the only theme in play is long positions and adding, and now in the process of closing those long positions. So nothing strong here in terms of US dollar, Japanese yen direction. What I can tell you is that retail traders are a little bit more short than they are long. They're always 50-50 around there with the US dollar, Japanese yen. So just beware of what's going on here. We still have this demand zone in play. For there to be more downside, that demand zone would need to be removed first. And lastly, we have the Kiwi. Longs are very cooled off. Shorts have been more aggressive as of late. And why do you think longs are cooled off? Because the retail traders are taking them. If you look at retail sentiment, they're mostly long the Kiwi right now. Now, we have demand in play. It's been holding up quite well. If we have a sell-off in the euro, I would believe that we're likely going to see some bearish pressure here. But with demand in play, as long as that holds, as the euro takes profits on their positions, this could be a launch pad for a much larger move to the upside. All right, ladies and gents, that's it. If you liked this session, please like and subscribe. If you want to learn more, join us at www.whiteoakfx.com. We'd love to have you. Come learn with us and be profitable. Thanks. Take care. Have a great one.